but our ability to do that is running out. So you got to have a portfolio that is an inflation hedge. That means make sure you have gold and silver as part of your portfolio. Invest in the mining stocks, but also other companies, agriculture, energy, that will do well, with a inflationary environment where commodity prices are kind of leading the way higher.
Welcome to Peter Schiff's insightful analysis on safeguarding your investments in an increasingly uncertain economic landscape. In this segment, Peter emphasizes the importance of building a resilient portfolio to protect against inflation. Stay tuned as he shares valuable insights on incorporating precious metals, mining stocks, and strategic investments in sectors such as agriculture and energy to thrive in an inflationary environment. Let's dive into Peter's expert guidance on securing your financial future.
Well, I think the U.S. economy is in a lot of trouble. I think, we're poised for a unprecedented, economic collapse based on the fact that the markets have prematurely celebrated the Fed's victory over inflation. The expectation is that the Fed is close to achieving its goal of, putting the inflation genie back in the bottle, that we're going to be back to 2% inflation. And that means the Fed could slash interest rates back down to the super low rates that people on Wall Street have grown accustomed to, as well as the U.S. government and American consumers. But that's not reality. Reality is inflation is here to stay. It's about to take a huge move back up towards the year-over-year highs. We went from 9% down to 3%, but that was mainly because of a 50% drop in oil prices. Well, oil's up 40% in the last 4 months, headed much, much higher. And, the reason we were able to get the price down before was an unprecedented dump of oil from the Strategic Petroleum Reserve. Well, it's now at an all-time record low. We only have about a 20-day supply. There's really not much they can sell unless they want to deplete it completely. So now there's nothing to stop oil prices from heading well north of 100, maybe 150 to $200 a barrel over the next couple of years. And with that going on, inflation's not going anywhere near 2%. That means the Fed's got a lot more to do on rate hikes. And that means it's not a soft landing, it's a crash landing, and probably a worse financial crisis than 2008. Inflation is headed much higher, at least, the official measures. So they have no chance of getting to 2%. The markets just don't understand this. Now the Fed has to, try, which means rates are going to stay higher for longer, and nobody can afford it. If just look at the federal government, interest on the national debt is now the third biggest line item of the budget. It just passed national defense. But by the end of next year, it'll probably be the biggest. It'll probably be bigger than Medicare, which is number one. Imagine that. We're going to be spending over $2 trillion a year just in interest on the national debt. And the next recession is going to see annual budget deficits swell to probably $4 to $5 trillion a year, because we're running deficits right now in peacetime in a supposedly good economy in excess of $2 trillion. That's never happened before. Well, nothing really. If they would have done the right thing sooner, we would have had a collapse sooner. The problem was the Fed never should have bailed out the economy following the 2008 financial crisis the way that it did. It shouldn't have slashed interest rates to zero. It shouldn't have done all that quantitative easing. The Fed set the stage for the tragedy that's about to unfold. And there's no way that they can undo that, right? The mistakes were made a long time ago. Now we're just having to deal with the consequences. Oh, yeah. And not just oil prices. Food prices, right. Everything's going to go up. And so the inflation is just getting started. We're at the beginning. If you look back at the 1970s, we're like 1971, 1972. This is early days. It's going to get a lot worse. Well, we got to shrink government. That's the most important thing we can do, is dramatically cut government spending so we don't have these huge deficits anymore, because that's ultimately what's been driving the Fed and inflation is, the fiscal deficit. So they've got to go away. We need to see a lot of deregulation so that businesses are not hampered by all of that red tape, so that it's easier for businesses to survive and compete globally, without all that government regulation to have to overcome. But unfortunately, we're still going in the wrong direction. We're still increasing the size of government and a burden that it places on the economy and on businesses. And so we're just making the problem worse. Yeah, well, right now, one of the best things the U.S. has got going for it is that other countries have problems too. And so the way the world has generally reacted to that is you buy the dollar as a safe haven, and that enables the U.S. economy to continue down this destructive path of consumption and debt. But now you're seeing a bit of a revolution around the world. A lot of the countries don't want to play this game anymore, especially after seeing what happened to Russia and how it got punished for using the dollar as a reserve. And so I think you're seeing this movement, particularly out of the emerging markets, the BRIC nations, to divest and de-dollarize. And that is going to be a huge problem for the U.S. going forward as the world makes progress in its move away from the dollar, because the dollar's role as the reserve currency is what our whole economy is based on. So we lose that and everything implodes, because our economy can't function unless we can get imports of goods that we don't produce, and unless we can rely on the world's savings to finance our debts. But if we can't do that, if we have to finance our own debts, if we have to produce our own goods, we're incapable of doing that.
Yeah.
But our ability to do that is running out. So you got to have a portfolio that is an inflation hedge. That means make sure you have gold and silver as part of your portfolio. Invest in the mining stocks, but also other companies, agriculture, energy, that will do well, with a inflationary environment where commodity prices are kind of leading the way higher. But also you need to own a lot of equities, but not the overpriced stuff that you find in the S&P or, the NASDAQ 100. You got to look around the world for value companies that you can buy at a low PE, that pay high dividends, that sell goods and services that their customers actually need and can't do without. And so as inflation pushes up the price of everything, they don't stop buying what you're selling. Maybe they'll buy a little less of it, but they're going to keep buying it. They're going to stop buying discretionary items. So that's not where you want to be. Or, you don't want to be selling things that the consumer could do without, because he's going to do without it, because he's got to eat. He needs to, heat his home or cool it or whatever. He doesn't want to be in the dark. So there are certain things that people are going to have to buy, and they're going to have to pay a lot more to buy them. So you want to own the companies that have pricing power, and not like, look what's happening now with all these cable companies, and other content. Consumers can't afford all these streaming services. They're broke. And so all these cable companies, content providers are feeling that, because they're losing their subscribers because they can't afford it. They need the money for food, right? So they don't have it. And so they're cutting back where they can. So you don't want to be invested in the companies that are going to, be on the losing end of that cutback. But I find the value internationally, and that's also a good hedge against the falling dollar. So I'm building portfolios for people at Euro Pacific Asset Management that you can't really do yourself, and no mainstream Wall Street firm is going to do it for you.
Thank you for joining us for this informative discussion with Peter Schiff. We hope you found his advice on creating an inflation-resistant portfolio valuable. Remember to subscribe for more insightful financial analysis and investment strategies. Take the necessary steps to safeguard your wealth and make informed choices in today's ever-changing economic landscape. Until next time, stay financially secure and informed.